welcome all, especially our President, Shri P.K. Tyagarajan ji, Dr. R.K. Patel, Vice President IOV, Mr. S. Pichaiya ji, Chairperson, Valuation Standards Advisory Board, Mr. Nitin Lele, Chairman, IOV Advisory Committee for Capacity Building in Valuation, Mr. Harish Luthra ji and partner Luthra and Luthra, legal advisors, and Mrs. Anuradha Gupta, senior IOV faculty, Mr. Sudhakar Vijay Sarthi ji, founder Evalo, and Mr. Devesh Jain, who is the lead member of Yuva Valuers Forum, and Ms. Meghna Pathak, who is a convener of Yuva Valuer Forum. I welcome all and thank all to participants here who have gathered to become the participant in this program. For too long, valuers were seen as support players operating behind the scenes, often underestimated or misunderstood. But that scenario was broken with the inception of IOV in the year 1968. And since then, with institutionalization, occupation of valuation has been evolving to become not only a profession but acquiring its own niche as a trustable and worthy profession. Presently, we are standing at the center of critical decision making across sectors like real estate, banking, finance, infrastructure, and public policies, and unlimited sectors. Our reports drive decisions, our insights shape outcomes. So today as we gather to mark Founders Day, we do so not merely to honor a date, but to pay tribute to the visionary of our founder, late Shri P.C. Goel Ji, a man who didn't just build an institution but gave shape to an entire profession. His belief was simple yet profound, that valuation is a public responsibility, not just a technical task. That belief became the foundation of IOV, and even today it continues to guide every step we take. This day is more than a celebration, it's a call to action, a reminder to enforce standards, invest in the next generation, and assert our place in India's development today. Uh, this this is the India's development story where we have to contribute, and we are not just here; we are here to lead, because value doesn't speak; it is revealed by valuers. Our theme this year, from legacy to leadership, next generation valuers with the specialized skills and smart tools, reflects both our roots and our readiness. It signifies our journey from the values we inherited to the responsibilities we now shoulder and the skills and tools we must adopt to lead in a rapidly evolving world. To move forward meaningfully, we are focusing today on five fundamental principles, each of which will be explored in detail today by expert speakers. Firstly is advocacy. A major responsibility of IOV is to represent the concern of the valuer fraternity and secure due recognition at every government and regulatory front. This critical role is being effectively carried out under the leadership of our President Shri P.K. Tyagarajan ji, Vice Presidents Dr. R.K. Patel and Mr. Sunil Agarwal, along with the entire team of IOV Council. Standards, the backbone of many professions. Our Valuation Standards Advisory Board, led by Mr. S. Pichaiya ji, supported by a team of over 100 valuers from different asset classes, is actively engaged in building stronger, clearer, and Indian specific standards to enhance professional trust and consistency. Compet- Competency through education, our strongest tool for empowerment. Under the guidance and leadership of Mr. Nitin Lele, we are designing new specialized courses in emerging and high demand areas such as ESG, IBC, Insolvency and Bankruptcy Code, Insurance, Marine, and Business Valuation, and list doesn't stop here, thereby ensuring that every valuer remains skilled and competitive. Legal empowerment. On the legal front, we are preparing to take a major institutional step that will strengthen the role and recognition of valuers within regulatory, judicial, and financial ecosystems. This initiative is being actively shaped by Mrs. Anuradha Gupta and Mr. Harish Kumar, who bring deep legal insights and commitment. And then technology, a must in contemporary time to equip the valuers for eventual competency in partnership with Mr. Sudhakar Vijayasarthi. We are building digital tools and platforms from mobile apps for inspections to cloud based data storage purposely for valuers to work more efficiently, securely, and with digital credibility. In order to bring about inclusive participation, I am pleased to announce the launch of Yuva Values Bulletin, our first ever publication dedicated entirely to young valuation professionals. Here is the you have shared. Here is this bulletin. This is not just a journal; it is a platform for voice, leadership, and connection. It carries forward the legacy of the Indian Valuer, a monthly journal traversing a journey of 56 years since it got published in year 1969 and now enriched with the spirit and spark of Yuva Morcha. So all kudos to our Yuva uh, valuers who have largely contributed. I am pleased to note and share the joy that we had plenty of articles contributed by the young generation, which is highly laudable. And within a few days, this bulletin was ready to be launched today. I can say it hardly took 10 days when we started, initiated this, and we got this good many articles. And maybe some are still not, maybe may not have found that in place. But this is the, and we today we are launching it. It will be placed on our website for everybody to see. So this is another milestone, or this can become a platform for the Yuva to join our mainstream profession with our seniors and already seasoned valuers. So our valuers forum under the energetic leadership of Mr. Devesh Jain and Ms. Meghna Pathak has already started making a meaningful impact. This bulletin is just the beginning. We'll soon be launching structured programs, mentorship avenues, and national initiatives to strengthen the participation of youth in shaping the future of the valuation profession. So, from today, let us recommit ourselves to the legacy that shaped us and to the leadership that the next generation must now take forward. Because in the valuation profession, your data is your foundation, your report is your voice, your ethics are your identity. So, with this, I end my speech on contextual of this program today. Thank you, and thank you all for, and I wish that this program will bring a lot of success to the participants, and they will be enriched with the valuable uh, sh- informations and valuable experiences shared by our eminent panel of speakers. Thank you very much.
Thank you so much, sir, for setting the context and delivering the impactful speech. Now we would like to invite our president, Mr. P.K. Tyagarajan, for giving the tributary address to in the remembrance of IOV's founder. President, sir, please start.
Okay. Are you able to hear me? Hello?
Yes, sir.
Okay then. Good afternoon to everyone. And Vinay Goel has given a lead how we have to proceed further with the hope of the founder. What he thinks we have to carry out in our profession to all the values of our country, which will be not only in India, throughout the world in the future. Particularly, as he mentioned, for the youth, we should carry forward with the latest technology in the profession and also all the data collection in a simple manner. Now, another thing what Vinay has spoken, due to the profession, what holds for the public responsibility and the growth of our nation in finance through our valuation profession. I moved almost 10 years with Mr. P.C. Goel and too close in every respect for 5 years or 6 years. What his view in the profession of valuation to our people, he guides us by sitting near the chair, listening all the people what we are discussing, either in the Congress or in the seminars or in the council meetings at a distance. But afterwards, he will give simply what we should carry out after the discussion. His guidance is most important for us to go ahead in the future. What has personally I learned from him few things. When a storm attacks, all big trees get uprooted, but grass always survives. Being simple and egoless makes us more powerful and stable. That's what I learned. Because we should be simple and egoless in everything. Another important thing what I learned from him, we have to do right time never comes. We have to make it right. We should not wait for that. We have to make everything what is important. As when I said, is the time for us for the youth and also Yuva and ladies in the profession. Most important to growth of the institution, we have to have discipline, punctuality, accountability, etc. for important in the profession to carry out. He is a keen observer in the finance movements of our institution. If he has not made this finance properly, we should not have so many buildings all over in India with few branches in their own offices and 2 major buildings in Delhi. Therefore, every rupee is accountable according to his knowledge. If it is important, you will get it. If it is not important, he will not allow to draw money. The same thing, he is watching what the branches are doing, and he will call me and tell me, and just mention me. Then I have to look into it and then report to him. Then he will guide me, and that will be discussed in the every council and spread all over the valuers through the branches, in particular. Nothing else except valuation and how to carry out, and discipline for follow everything. As valuers, we should be a model for the profession to carry out, and at the same time, our work should replicate for everyone. We should not talk, only our papers and our reports, everything should speak. Just put the table and that will speak to them. That's what I learned. And that is why still he is blessing us, and that's why IOV is growing step by step, and now we are at the top in the profession in India. And we are moving not only in India towards the global wise. That's what Vinay Goel is taking that matter, and we will see how, with the cooperation of all the values of our country, with the branches' help and support of the council, to take every decision to move forward and to remember forever P.C. Goel in the profession in India. Therefore, we pray for his soul always, and he is blessing us from heaven, and we values of our country through council members are blessed with the branches. Okay? Have nice time, have a good seminar, and I will also listen to it, and then we will look into it. The topics that has given today really is wonderful. Each one is important for today, and I like the faculty members to deliver their excellence, and which will be useful for them youngsters mainly, for take carry out their profession in the future. Thank you very much. Go ahead. Huh? Thank you very much for the opportunity given to me. I look forward for good see again throughout this year. Continue, and we have to have a nice, excellent Congress this year at Raipur, Chhattisgarh. Thank you very much.
Thank you, sir. Thank you, sir, for your valuable words for us, motivating and always, like always. And that is how we are proceeding. And under your leadership as a president of our institution of values. Thank you.
That's all given to me by P.C. Goel, not anybody else. I learned a lot.
Now
That's
I would
what
like
I'm
to
going
invite
replicate
our
this.
Vice President, Dr. R.K. Patel, for giving his insights on challenges in practice and getting empaneled, which is the most question I want to answer by the valuers or to seek from the experts.
Good afternoon.
Good afternoon.
Can you see my presentation?
Yeah, go ahead.
Good. Good afternoon to all. And I have been challenged to speak on challenges on valuation, practice, and getting abandoned. I think this is really a challenge to speak on this subject. Anyway, we are thankful to late Sri P.C. Goel Ji and his vision. And though he might have started with a little objective of valuers for bankers actually, but slowly he might have faced lot many troubles and lot many issues to make the valuers presence in the Indian scenario. I think he might not have thought that these challenges would be very complicated in the coming days. And today we are all facing a lot of challenges in valuation practice and also in getting empaneled. So I have some ideas on this, and which I am going to present. And this, I think, with his vision, we have to take this forward and meet with all the challenges and make our Indian valuers presence all over the world. See, we have to change the mindset. That is a legacy mindset to leadership mindset. I think we valuers have to take the leadership role, and we will have to focus not only on our individual objectives or individual goals, but we will have to think of the community as a whole, and we will have to think of or focus on empowerment and development of the valuation profession. We will have to think of service and purpose properly, because this is the service, you can say business also, not only practice. because we are going to serve various stakeholders in the country. So we should be service oriented and it should be purpose oriented. Then we have to bring the relationship, as Mr. Vinay Goel said and our beloved president said, that we will have to create a trust, respect, and mutual understanding with the stakeholders. I think we will have to create a trust that yes, these valuers, registered valuers or approved valuers or whatever you say, people should trust us, respect us, and this is a great challenge. It should not happen that we should be carried away by the dictators to give the value, but whatever we can give, it should be a fair. I think this is a very great challenge to create a trust, respect, and mutual understanding. Then we should have a clear vision and core values that guide decisions and actions, because our report should lead to, it should be so fluent and so lucid that and it should lead to the decision makers decision making in a proper way. And we should not forget that there is a great challenge of accountability and responsibility. We should be accountable for whatever we report, and we should be responsible for whatever methodology and processes we have followed and whatever results we have arrived at. Then every day there are changes in the regulations and then laws and I think disciplinary network also, because there are watchdogs like regulators, IBBI and other government bodies. So I think we should have adaptability of this change and these kind of challenges. Courage of making difficult decisions. I think we should have courage to take up the assignments which are really challenging. Then only we can compete with the international peers. Then we have to have control over emotional intelligence, because we should not be carried away by the so-called old age orthodox methodologies and all these things. We have to keep on changing the valuation methodologies and models, and at the same time we have to empower others. We have to develop the new generations and train them, as Mr. Vinay Goel has a vision to train the Yuva people and all these things. I think we have to empower others to take the future challenges and meet with the international competition. Then I have one more challenges in valuation practice in general. So this applies to any kind of valuation practice. We should have a clarity and purpose. Very clearly, purpose should be defined so that we can have appropriate, we can develop and adopt proper methodologies, appropriate methodologies, and certain methodologies we adopt, certain methodologies we don't adopt. We should have all the reasoning and logic behind that so that we can justify whatever results we derive. Demonstrate professional competence. I think professional competence is very, very important. We have to keep ourselves abreast with the latest developments and latest methodology and latest researches carried out in the field, so that we can apply in, at the appropriate place. Then we have to create the valuation models. I think International Valuation Standards have clearly said that one has to create a valuation model for a given valuation. So these valuation models may not be available in the standard form. One has to develop the valuation models. I think valuation models have been emphasized in the latest amended valuation standards. Another challenge is the lack of reliable data. We may develop the valuation model, but what are the inputs? We may not get the proper reliable data which can be inputted. Dynamic regulatory framework. Regulatory framework, as I said, that every day these regulations are changing, laws are changing. So we have to have the updation on this, and then how it impacts the valuation. I think we should be able to address all these things. Using wrong approach leading to over or under valuation. I think we should be very careful in selecting the approach. We should be very careful on either nullifying some method approach or adopting a particular approach and emphasizing only of that one approach. I think we should be very careful and we should be able to justify that. careful use of comparables. Sometimes comparables are used. It is a very easy way to do the valuation, because certain property is being sold at certain rate. I think my property should also be sold at the same rate. We have to compare not many things. It may be it must be of similar size, specifications, location, or if at all they are not, that we should have proper justification of adjustments. Highest and best use, I think this is the great challenge, because every investor, every buyer thinks of highest and best use, whether we have applied this principle, which is very highly emphasized in the valuation standards as well. Then we should be very careful about the bias and subjective judgment, because at a lot of places we are required to give the subjective judgments. So we should be very careful on that. Effective communicating valuation results. I think effectively we have to communicate the valuation results, so it should be in a convincing manner and justifiable manner. Coming to the challenging in corporate valuation practices, because when we are in the Companies Act, Registered Companies Act, I think we have more challenges compared to even giving the valuations in banks, because in banks there are hardly three parties involved. One is the valuer, second is the borrower, and third is the financer. I think only two parties are making transactions, and we are intermediary giving the opinion on valuation. But here, when you do the corporate valuations, you are not only dealing with only two parties. Stakeholder may be directly observable or maybe remotely non-observable. So I think here there are a lot of challenges. One is the fairness to the stakeholders, because any stockholder will be the user of your valuation figures, and he may be affected positively or negatively. Companies' intangible assets. Intangible assets are making very lot of great challenges, because in lot of asset valuations, intangibles are ignored, but intangible individuals are definitely attached to the tangible assets under valuation. Availability of data is also again a great challenge, because accounting, suppose you are doing the business valuation and applying the income approach for plant and machinery or real estate. So in that case, no appropriate data may not be available. Financial statements might not have been prepared the way they should have been prepared, and they may be adopting different methodology, different policies of depreciation, maybe expenditures and all these things, and then accounting of inventories. So this is a very great challenge, and one should have appropriate knowledge of adjustments of these financial statements, or you can say normalizing the financial statements. I think this is also very highly emphasized in the valuation standards. Appropriate methods for a given purpose, prescribed or non-prescribed, because sometimes accounting standards and statutory laws or maybe regulatory bodies, they may have particular methodology is prescribed. So I think when statute is there or regulatory body is prescribing methodology, that prevails over the valuation standards. So I think one has to have the knowledge about the methodologies prescribed under the regulatory. This is a great challenge in the corporate valuations. Market volatility. I think market is every day changing, and it has definitely impact on the values of the assets. So one has to be very thorough in analyzing the market volatility. And regulatory and accounting standards, as I said, one has to have the great challenge on understanding of the regulatory framework and accounting standards. Biases in valuation process, definitely it is going to be there, and we have to handle those biases. Influences of non-financial factors like environment, social and governance. I think this is a very great challenge, because these non-financial factors, ESG, has a great impact on the valuation of assets and under valuation. So corporate valuations are having these kind of challenges. Now coming to, I have not touched about the challenges in bank valuation, because most of the valuers are dealing with the banks and they know what are the challenges. But definitely getting empaneled, they see the last your performance and then your qualifications and all these things. So getting empaneled as valuer with banks and financial institutions, public sector companies, regulatory bodies, and government bodies. Regulatory bodies, I also put courts also in this category, because courts are also empaneling the valuers. for that, I think for liquidation or maybe for dispute resolution and not. So this calls for technical qualifying criteria. Maybe 34 AB, the Wealth Tax Act, or maybe IBA registered, or maybe chartered accountants, cost accountants, company secretaries, or chartered engineers. So that may be, because when you see the excise laws, valuations are done by chartered engineers. So similarly, they have their own ways of qualifying the criteria, maybe experience criteria, maybe requiring certain team network, maybe turnover criteria. Team leader plays very important whenever one goes for valuation, because experience and credentials of team leader plays very important role, and it has definitely marks in qualifying technical qualifying criteria. So past performance, minimum sizes and valuation of assignments of particular type handled in last few years, I think this is also the qualifying criteria. Competitive bidding, definitely competitive bidding is always there, because everybody thinks of cost saving and competitive. So one has to have the I think expertise in bidding, maybe through tender process. And nowadays, no, the public sectors are going through jam. So jam bidding is very famous. So and highly practiced. So one has to have the competence on that. Thorough understanding of valuation method, process, and standards, because in the program qualifying criteria, before opening the financial bid, they call for presentations, and that how you will apply the methodology and processes to test your technical competence. Participation in the international and or cross-border valuations. I think we have now our IBA registered valuers and other valuers through experience or through various courses and various skills developed. They are now competent to compete with international peers, and they go cross-border and do the valuations abroad. So qualified criteria is definitely first, but there must be thorough understanding of valuation standards. Some of the countries might have their own standards, or they might have adopted the international valuation standards. Thorough understanding of accounting standards, because every country has their own accounting standards. If at all they have not adopted international financial reporting standards, ditto. So in that case, I think one has to have the accounting standards, because valuations for tangible, intangible, and business valuations are sometimes calling for impact on accounting aspects also. So thorough understanding of IFRS, International Financial Reporting Standards, thorough understanding of public sector accounting standards, because abroad there may be public sectors getting valuations done, so they might have the public sector accounting standards. So these public sector accounting standards may be deviating from accounting standards and or international financial reporting standards. So I think one has to have the thorough understanding of that country's public sector accounting standards. Industry regulations of that country. So particular industry you are valuing, for example, power sector or cement sector or whatever it may be, fertilizer sector. So these industry regulations have also impact on valuations. So under those regulations only they can work. So this is what, and that pollution control norms may be different. So all these things have an impact. So one has to have this challenge. International bidding, definitely, as I said. So ultimately price plays the role, but at the same time, they might have weightages on technical criteria and financial criteria. So one has to have a trade-off between technical qualifying marks and financial qualifying marks. So, and they might have some kind of formula of evaluating. So one has to understand those requirements. So these are the challenges, and I think our valuers are competent to do, and they can they might have started with the vision of Mr. P.C. Goel, and his vision will take them to the international level of value. Thank you very much.
Thank you, Patel sir. You have taken up the topic as challenges for the younger valuers to understand, and very discreetly you have described what ought to be described. So thank you very much for your perfect presentation as usual. So now we move on to Pichaiya Ji, who is our Valuation Standard Advisory Board's chairman, to come forward and present his presentation. Thank you, sir. Sir, unmute yourself, sir. Pichaiya Ji, sir, unmute yourself, please.
Respected President, Honorary General Secretary, Vice Presidents, Council members, fellow valuers, ladies and gentlemen, a very good afternoon to all of you. I thank IOV and IOV RVF for giving me this opportunity to be part of this great program and address on this topic of valuation standards, creating consistency and trust. So it's not only this 20th May. This is not just a day to remember Mr. P.C. Goel, but every year, especially in the past 57 years, journey of IOV, the Founders Day, reminds us of the great responsibility that lies ahead of the valuers fraternity. Every Founders Day gives us a wake-up call to remind the responsibility for all of us, looking back and reminds on the great visions of Mr. P.C. Goel. And while attempting to look ahead, we are we need to realize that we are in a critical juncture with many opportunities and challenges. Many opportunities opening up with a lot of challenges, and the profession and the challenges emerging for the professions and the professionals and the professionals. So we all know the great vision of Mr. P.C. Goel, the General Secretary and the President have already indicated whatever were the great visions and how we are trying to achieve that, and the role played by IOV and IOV RVF. Now it is we are trying to strengthen their positions in the valuation domain and contributing to the growth. So VSAB, as already indicated by the General Secretary, we are trying to cope up with the challenges. Now we have about 100 plus members who are working. We are trying to reorient the activities and to move forward in the near future. This year's theme, from legacy to leadership, next generation valuers, specialized skills and smarter tools. This clearly aligns with the activities of the standards. We have started working from what you call now looking back and looking forward. So this I always used to have this slide common to every presentation wherever I make. The profession started in 1894 with the Land Acquisition Act, and now it is about 130 years. And we are 2025. We have the Companies Act now, the latest one, and since 1894. There was no professional or RVs in those years, about 130 years. So 60 years since 1894, the Estate Duty Act envisaged registered valuers under Section 4, and 56 years since the Wealth Tax Act, the famous Section 3480. So during the 130 years, there were only 2 instances where the profession was considered as a as an independent domain or something like that. Now the Companies Act has put us on the center stage of valuation. I think all of you know that there are 10 assets which are in the to be under the Registered Valuers section and the Estate Duty Act, and the 10 assets in wealth tax. And now we have only 3 assets. Then I think we have a lot of scope for enlarging and then standardizing the process. So now the transformation is driven by these regulatory reforms. Now we have the Companies Act, Section 247, which envisages the Registered Valuers under the Companies Act with a somewhat regimental regulatory framework. And we are the valuation profession is also impacting. Have to consider the technological advancements and their impact on the valuation of assets. And we need to understand the evolving market dynamics and the externalities. These are factors which are common to any transformation, and valuation is no different. So I just collected some information on the surge in demand for valuation. Estimated global business valuation service market growth now is around a compounded average growth rate of 21% from 2025 to 2033. So the business is estimated to be around 1,380 billion by 2033. But I think no serious research at the national level in India. So these are the causes of this growth is that the absolute need for accurate financial assessments for various purposes. And then the complexities due to technological disruption, and now newly found that ESG. And then increasing global trade and cross-border trade. These are the factors in general as fuel the surge in demand for valuations. So these are the sectors. These all of you know that. I don't want to explain one by one. Asset valuation today and the the expectations from the stakeholders is not anymore assigning of numbers. It requires that the valuation should enable consistency. Any valuation should enable consistency and universality, comparability, transparency, efficiency, and mitigating risk for the stakeholder, and very importantly, credibility and reliability of the numbers, and then defensibility, that when your report is submitted, if there is any dispute or question, how you are going to defend it, and ultimately bringing in the trust, which is part of the theme of this program today. The trust among the stakeholders and the society is of Himalayan importance, on which the entire stability of the whole profession depends upon. So standards compliance valuation provides the framework for addressing all these issues. So in this context, I just prepared a comparative statement of pre and post valuation standards. Now in 2017, we in the 16247, the need for standards compliant valuation has arisen, and now almost all the registered valuers have started doing the standards compliant valuations. But in this context, we need to understand what was the situation before pre standards compliance and post valuation standards compliance. Now in the regulatory framework, what are the changes? What are the impacts that's happening because of the standards? So when it comes to regulation, before the standards, it was fragmented, with the different standards, and no uniform standards were there. Now after the standards compliance and the introduction of IVS and other standards, now we have a unified codified IVS, USPAP in US and so on. Now we are working towards an Indian national standard. And then what about the oversight of the valuations? So minimal oversight before the standards. Now, since the standard compliant requirement, when it's subjected to oversight, the situation is significantly improved. Now, after the standards requirement of standards compliance, the regulatory oversight has been introduced as a mandatory provision. And then previously we didn't have oversight. Now in the previous years before the standards, only the valuation cell of the income tax department used to verify, and only those valuations which are submitted for the tax purposes. Now we have the regulatory oversight introduced. Now IBBI, RVOs, and then the Indian Bankers Association in a small way. And then what is the impact on the valuation practice? The methodology before standards, there was inconsistent use of methods. Now after the standards compliance mandatory requirement, we have the approach and methodology, market income and cost and so on has become mandatory. Before it was a subjective application. Now we have methodologies like DCF which are recommendatory in the standards. So coming to documentation in valuation practice, it is often incomplete and inconsistent. There is no mandatory requirement for a specific, what you call a consistent requirement. Now, there are detailed and consistent documentation is required under the standards. So when it comes to the assumptions made in practice, it is normally, before standards compliance requirement, it was subjective and not always disclosed in the report. There was we never reported, the reason for making assumptions in our reports. No, that was not the practice. Now, disclosure of assumptions and limiting conditions have become mandatory. These are some of the what you call new transformation that is making the reports more consistent and more transparent. And the next one is the professional competence and ethics before and after after the standards compliance. The qualification was not mandatory previously. It was not uniformly mandated, and now, as we all know, the standards compliance require what you call a mandatory qualification, and then CEPs have become mandatory. So, added to the qualification, now the CEP requirement makes the what you call continuous professional development as an important criteria for continuing the professional license. And then ethics, it was varied, and for various purposes, no serious standard on ethical issues were there. Now, after the standards compliance requirement, mandatory adherence to professional code of conduct has become now stringent. Now it will be mandatory for all of us to follow the professional code of conduct. And then coming to accountability in professional competence and ethics, a limited liability of enforcement was there. Now, I think we never heard of any serious complaint against a valuer or conviction or repanelment very often in the past. Now, after the standards compliance, we'll be having enhanced accountability. The peer review is part of the RV rules, and then disciplinary actions will be more stringent in the coming years, as the credibility of the reports have become very crucial for the very functioning or very use of the report itself. And then market impact and stakeholder trust. This is the most vital thing for any profession. Now, how our valuations impact the market, and what is the kind of trust the stakeholder has in our reports. Now, in the considering the investors' confidence. Now, before the standards compliance, it is always normally skeptical, and often valuations are accepted with some what you call a kind of skepticism. Now, after the standards compliance, if the standards compliance is full and 100%, and then in an efficient manner, the greater trust and reliance on valuation reports will considerably increase. Now it is increased. We are able to see from the clients that if we are going to specify that this is a standard compliant report and try to convince them that the standards compliance is done with sincerity and credibility, then I think the stakeholder has slowly started understanding that a standards compliant report induces confidence in the investors. Then coming to transaction use, for which your valuation is now put to. Now, evaluation even in a bank valuation, normally when you give a report, they either say that this is low, too low, or too high, or something like that. So it is often always challenged or renegotiated. They ask you to give a different valuation, even for it is for Companies Act or whatever. Now, under the standards compliance regime, the valuation is seen as a more robust and defensible. So we can also convince the client that we cannot be doing what they require, and at the same time, we have to consider the various aspects from the stakeholder point of view also, and make a defensible report. And then coming to the legal acceptance. Previous to the standards compliance, it was less defensible in legal or tax disputes. And in fact, I had a lot of experience in courts, and we have to defend ourselves. We didn't have any kind of SOP or a standard. So it was becoming less and less what you call. It was really a tough task to convince even the lowest court, even in the trial court. It was very difficult to convince the stakeholder. The judicial authorities. Now it is more readily accepted, in courts and maybe even in mergers and acquisitions. taxation and regulatory filings. Now it is more readily accepted because it is a standard compliance report. So these are some of the perspectives of which we have not been discussed in detail. I thought this would be give an insight to all the valuers. So how a standards compliance report can make a huge difference, not only in for the valuations to be more acceptable, more credible, more reliable, but also improve the stature of the valuers, and also convince the stakeholders that an appropriate value has to be given. If an appropriate only will be accepted in the coming days to come. So this is a very important milestone that standard compliance has come into being, and we all understand at the standard board we are finding it extremely challenging to prepare a national standard. I should say that we have to work a lot, and what we have done. To be very frank, I'm not fully satisfied, and we are trying to move forward. I expect more members to join the team of experts which are already working on that. So with this, I would like to conclude that today is a day, a Founders Day, of the birthday of ceremony. I mean, we are remembering the great doyen of the valuation profession, Mr. P.C. Goel, and I am very happy that the Honorable Secretary is taken up the mantle with the able guidance of the President, and are doing an excellent work with regard to what you call a comprehensive work in all fronts as far as the valuation is concerned. We are now able to keep our pioneering and position of preeminence with all the stakeholders and among the professional organizations and all the stakeholders. It's because of the sincere continuing legacy of IOV, and I take this opportunity to congratulate the President and the General Secretary, Vice President, and all the council members for their wonderful effort and the continuous support you are extending to the Valuation Standards Board. I sincerely promise that we'll be able to work with more dedication and come out with positive results as far as the standards initiative is concerned. Thank you for giving me this valuable opportunity to share some of my views. Thank you.
Thank you, sir, for your most valuable words or insights on how a valuer can attain the consistency and transparency in his valuation reports, which is the requirement of the day, and bringing and standardizing the valuation practice is a must for today's professional works to be carried on. And I think it will be a great journey. You have been working hard on this subject with your team of more than 100 now who have joined you, and I perhaps foresee that in near future we will be able to showcase what we have done, and it will be a great time or a great historical event in itself when IOV is able to produce its document on how it can be standardized, the practice can be standardized, and how the valuation can have the standards, and specifically Indian specific standards. So we have the international valuation standards in place, but the gap has to be built, and the gap has to be in our own way. So in truly, I would say it will be a great work being Atmanirbhar, what the today's demand is. We can see its effect and how we can proceed. Thank you very much, sir.
Thank you,
And
sir.
now I let Mr. Nitin Leleji showcase his role of education and capacity building in evaluation, which is a critical aspect of our and rather basic pillar where we create the competency, where we create that environment or the platform a person can have achieve his competences in various fields. It's so vast valuation that it is required. Thank you. Please, Lele sir.
Yes. Can you share my PPT? Which has us.
Yeah, yeah. Huh? Okay, no? You have shared. It is shared, sir. You are able to see
No.
on the screen.
Pichasa's PPT
You are
only.
mute. Lele sir, unmute yourself.
Hello.
You can see this. Your presentation is seen here.
Hello. Yeah.
You can see your presentation here.
Yeah. And I will just start by praying Dr. Shri P.C. Goel, without whom we would not have been here. So my namaskar and great tributes to Dr. Shri P.C. Goel. Now, the topic given to me is role of education and capacity building in valuers' life. Though education and capacity building play a crucial role in the field of valuation, whether it is in the context of finance, real estate, business, intellectual property, or environmental assets, or any other domain, where determining the value is essential. If I break down, I can list 7 roles of education in capacity building. Next slide, please. Okay, anyway, the out of 7, the first is technical competence, which is required to be enhanced. There are 2 essentials. First is understanding the valuation methods, and second is use of tools and models. Understanding valuation method equips a professional with knowledge of various valuation techniques like discounted cash flow method, DCF, or CCA, that is comparable company analysis, or precedent transactions and cost approach. Now, training builds the ability to use the financial modeling tools and softwares, for example, Excel or valuation platforms, which are essential for accurate analysis. The second is for ensuring consistency and standard. It is necessary to adhere to standards. The formal education and certification which IOV promote adherence to industry and regulatory standards and reducing discrepancies in valuation of properties. Quality assurance is a vital factor. Capacity building uh, initiative helps ensure that the valuations are consistent, reproducible, and transparent. The third is a promotion of ethical and professional practices. Uh, in ethical decision making, education instills a strong ethical foundation, which is crucial for avoiding biased and manipulated valuations. Ongoing capacity building reinforces the importance of objectivity and fairness in valuation process, and thus professional integrity. The fourth point is building sector specific or specific expertise. Now, with this new generation, tailor-made or tailored knowledge in education is need of generation. Education allows professionals to specialize in sectors, for example, real estate, import and export, insurance, marine, mines, startups, environmental assets, and so many others, each with unique valuation challenges and standards. There are complex assets like ecosystem services or intellectual properties which require knowledge across finance, law, science, and valuation, which can be gained only by way of interdisciplinary learning. So, a valuer has to be interdisciplinary objective. Then, empowering decision makers, the informed stakeholders can make sound economic and strategic decisions based on accurate valuations. Education ensures that all parties involved can understand and critique valuation reports, enhancing the trust. Sixth is enabling innovation and adaptation. Adapting to change. This is very important. As markets and technologies evolve, continuous learning ensures valuation professionals remain up to date. That is for valuation of digital assets or AI startups like that. The academic institutions contribute in developing new theories and methodologies by research and development. The 7 point and the last and most important is capacity building in developing economic. In economic development, training local professionals strengthens financial markets and investment climates in the developing region, and that reduces independence on external dependence on external consultants, enable local valuation professionals to conduct high quality of valuations and reducing reliance on external consultants. So these 7 points which I gathered for the role of education and capacity buildings, here are 3 specific case studies which illustrate the role of education and capacity building in valuation across different sectors. The first case study is from Nigeria. Nigeria aimed to strengthen its capital market to attract foreign investment and improve transparency. What was the role of education and capacity building? The Securities and Exchange Commission of Nigeria, SEC, partnered with international bodies to train local analysts and regulators on modern valuation techniques. The courses were conducted on International Financial Reporting Standard, IFRS, and DCF analysis, risk modeling, and corporate governance. The universities and training institutions updated their finance and accounting curricula to reflect global valuation standards. And what was the outcome? It improved valuation quality, which was good for IPOs and financial reporting, and increased investors' confidence and foreign direct investment, that is FDI. And Nigeria Stock Exchange gained recognition as a frontier market. The case study number 2, it is from Costa Rica. The PES program, that is Payment for Environmental Services. The Costa Rica implemented a Payment for Environmental Services, PES program, to compensate landowners for conserving the forest. The role of education and capacity building was environmental economists trained local authorities on economic valuation of non-market goods such as biodiversity or carbon sequestration. Carbon sequestration means the CO2 which is in the form of gas is to be converted and stored in liquid or solid form. Then capacity building for NGOs and local communities in cost benefit analysis and sustainable land use planning. And universities offered short courses on natural capital accounting. And what was the outcome? That enabled proper valuation of ecosystem services, legitimizing payments to landowners. It contributed to 60% increase in forest cover since 1987. The program became a global model for environmental economists. Now I come to third case study, which is from India. The startup valuation in India's tech sector. Background as India's tech startup ecosystem grew rapidly, requiring reliable valuation for fundraising and IPOs. institutions like IIM or ISB introduce modules on venture capital, startup finance, and valuation under uncertainty. Incubators and accelerators conducted workshops on market sizing, like TAM, SAM, SOM analysis, and valuation modeling. CB and ICAI collaborated on valuation standards for startups. And outcome, the founders gained confidence in negotiating equity. Investors received consistent and structured valuation reports and promoted transparency and reduced investment risks. All the above case studies reflect how important is role of education and capacity building in valuation. Thank you all. Thank you, IOV. And one big thank to our founder of IOV, who made the effort to bring all the values on one platform for education and capacity building. Thank you, President. Thank you, Vinayji. And thank you all.
Thank you, Leleji. Your views and insights on what the role of education can deliver to the valuers and improving their efficiencies and competencies are noteworthy. And not to forget that you are creating so many courses. Now I have to count on that. And I think soon we are starting your spearheading with the very ambitious projects of ours, like marine valuation and insurance valuation. We are almost like prepared for launching it. And of course we have launched ESG valuation, and then we are starting our IBC course on IBC and the role of valuation in that, and in that entire bouquet of IBC education. So from here I move on to Anuradha ji and Harish ji of Luthra and Luthra, who are going to give us the legal insights in valuation and other fields, general talk. Welcome, Anuradha ji and Harish ji. Thank you.
Very good afternoon, Vanessa and Tyagarajan sir, Lele sir, and all the
You are
respected
unmute,
dignitaries.
Anuradha.
I'm unmute, sir.
Yeah.
Not audible?
Oh,
Am I audible?
yeah, go ahead.
Yeah. So first of all, congratulations to all of us on this Founders Day, and our tribute to respected Goel sir for bringing this entire valuation profession and giving it a proper shape to the professionals. But as a valuer, I think it is not only that we are in a profession, we are a professional, but simultaneously we have a lot of roles and responsibilities to be played here, right? And obviously when we have been bestowed with certain responsibilities, roles, at the same time, we have certain legal implications also. In the recent time, we have seen number of cases that has come up either through the IBBI for the registered valuers, or from the different courts, certain action has been taken by the RBI and all other authorities, where valuers have, I wouldn't say that they have done something wrong, they have been slightly careless or maybe negligent. So as a professional, we have to ensure that we are giving our sufficient input, sufficient efforts in the valuation exercise, because on our valuation, a number of decisions are to be based. And I think no better person to give an insight on this is better than Mr. Harish from Luthra and Luthra. Harish, welcome to you. Harish, you are here. So till the time he comes in, and I'll just give a quick intro of Mr. Harish Kumar from Luthra and Luthra. As we know, Luthra and Luthra is a leading corporate firm, and Mr. Harish is a senior partner over there. He is a company secretary as well as law graduate and insolvency professional, and has been into the number of cases which we talk as a milestone cases under IBC. And In that process, he has also taken good care of the valuations that has been done. Apart from that, he has been a key part of the various mergers, amalgamations, and also the government. He has been advising to the government on various matters. So most welcome, Harish ji. And we are waiting to hear you on the legal aspects and the precautions that are to be taken care of by the valuers in this very important session of yours. Most welcome to you, and over to you, Harish ji.
Namaskar, Ashish ji.
Namaskar, sir.
Welcome.
Am I audible?
Go ahead. Audible.
Thank you very much, Anuradha, for this kind introduction. First thing first, I would really like to, extend my heartfelt gratitude to late Shri P.C. Goel Ji, for having sort of established this needed organization. Probably he would have not thought at the time and he would have set up this organization. But this organization basically is the need of hour, if you ask me. And I'll sharing my thought process, the level, the way this legal and the regulatory, landscape has been changing effectively for last 8 to 10 years. I'll share my thought. I'm coming for the first time to speak on the subject of valuation, but believe me, this subject is very, very core to my heart. I'm a lawyer by profession, primarily doing a corporate commercial transactions, briefly mentioned by Anuradha, be it IBC, acquisition, M&A, of the IBC transactions, slum sale, BTA, merger acquisition, code-driven stand, maybe privately arranged into share purchase agreement acquisition. But the topic is very close to heart because primarily I'm a commerce law graduate from Delhi University. I'm also added qualification of chartered accountancy, company secretaryship, and I'm also by the way a qualified insolvency professional. But I don't practice that as a professional because I'm not allowed to do. I am doing more like a corporate lawyer, representing all the side, be it buyer, seller, and have been extensively extended in terms of advising with the government on many aspects. So I'll start, and this topic is very, very critical, I'm telling you, and I'll share with you the live things and probably the constructive data, which I hope the people would, in a way, to appreciate. See, the way this regulatory landscape, the legal landscape has been changing for last about a decade has been significant. There is a drastic shift, and I'm bound to compare a era, prior to basically a era when we got a significant move in the context of Indian industry was the 1991 industrial policy when the India was open to the foreign players. Late 90s, MNC starting up, setting up the business in India, be it telecom, be it industrial conglomerate, client like GE, Vodafone, Vedanta, they all shifted to India. Foreign Exchange Regulation Act, which was more regulatory, got shifted to management side. We got Foreign Exchange Management Act, right? We got FAMA coming into FARA, shifting into business by going up. It was more liberalizations. That all was happening. So 95, 96 onwards till 2005 was a booming area in terms of the industrial growth, so to say. But then it was more into a stagnations in terms of compliance, advisory, disclosure. But if I compare the position maybe for last a decade, for the time from 2005 to maybe 12, 13 in between, there is a drastic change. The change is a mix of emotions, experience, positive or maybe I would not say negative, but maybe restrictive to many people, be it stakeholder, industrial, professional. And if you see just certain law, because these laws are relevant for you guys, because we have been doing valuation from the perspective of law like corporate law, when it is a preferential issue happening, SEBI law when it comes to dealing with a listed company, IBC, which got enacted in 2016, which still is a evolving law. And we have seen how Supreme Court has undo the transactions, which was a closed transactions in case of Bush and Steel. And this has become a talking point amongst all the stakeholders. FEMA, which has been liberalized. Today, we are talking about valuation of subject matter like internet, basically the space. We have a live cases when the valuation is being done of the satellite, right? So that much of advancement is happening in the context of what you say, business transactions. Recently, Government of India has liberalized the FDI policies because there is a potential investment into this space belonging to Indian territory, right? Talk about the Companies Act.
Companies Act, which got replaced in 2013, has become more sort of subject to subordinate legislation. About if you talk about the level of subordinate legislation, when I say subordinate legislation, that is a rule making power of the government of India by way of issuing clarification circular. If I compare the 1956 Act with that of the 2013 Act, it's about 76% positive change. While under the erstwhile 1956 Act, out of the total 658 number of sections, it was merely 108 number of sections, which was giving the government of India to make rules, issuing necessary clarification circular. But this number of 18% has gone up to 76% under the new act. So now under the total 470 number of sections, it's about 342 number of sections, which is about 76%, which is almost 5 times, gives that rule making power to the government of India. So when I say rule making power, it includes clarification circular. Why I'm saying it is relevant? Because this across applies to professionals, including valuer, because valuer, they have got a statutory codification under section 247 of the Companies Act. You would appreciate, like the duties of directors, which are codified under section 166, the role, responsibility, broad duties are codified under section 247. And we have a draft legislation, which I'm sure people would have been aware about, the valuation bill, which is under consultation stage. Maybe there is a need. I personally feel there is a dire need to have this law in place for the simple reason. Today, a valuer is subject to a sort of monitoring by various regulator. There may be an issue coming up from the ROC of the Ministry of Corporate Affairs, and they may, if not challenging, maybe question upon the valuation of a valuer in terms of the preferential issuance of shares. So first regulator may be the MCA through the extended arm of RD and Register of Companies. Believe me, many a times we have seen the written observation from the regional director when it's a case of merger happening, and they are putting obligations, observations, qualifications, they are negative covenant vis-a-vis the valuation. They say there is no valuation, or the valuation doesn't seems to be fair on account of the fact this is about 6 months old. This is about a year old. But they forgot the concept that there is no change, or the very basic aspect that there is no change in the business operation of the company for last 6 months or so. And it all goes into a spin from to and fro argument happens. Then the NCLT, which got replaced the CLB, or the High Court power to approve a merger, that happens, and they approve the merger with some modification, some kind of direction. So the first regulator for valuer could be MCA, RD, ROC. Second, we have a RBI case, including the authorized dealer when we do the valuation vis-a-vis the FDI, ODI. Third, certainly is a SEBI, including the relevant stock exchanges, when they take into consideration, go through the relevant documentation, including the fairness opinion or the valuation report, approving a transaction. Fourth, last but not the least, is the IBBI, which is a new authority. So now I like an auditor, the auditor who has been subject to MCA, ICAI, SEBI, stock exchange, and that of NAFRA recently. I think the position of value is almost similar to that of a statutory auditor. And I don't know if you guys would have gone through the relevant judgment of Supreme Court, but that's very important judgment. The Supreme Court judgment, which was given about 4 to 5 years back in the case of Amrpali. In that Amrpali judgment of Supreme Court, they have really gone into and they have really detailed the role, responsibility, importantly, the basic responsibilities of a statutory auditor. They have really gone beyond the sort of, I would say the statutory books. They brought in the very concept of corporate governance. What is corporate governance? The inner consciousness of a professional, be it a lawyer, be it a professional, be it an expert, and they have really detailed that concept. So I would say, from the perspective of a valuer, it is always better, to be on the preventive side rather than going to cure it. As we all know, prevention is always better than cure. When we have all those precedents, we know that things are happening, and we are living in a highly sort of dynamic zone of regulatory sort of framework. It's better to prepare for better future. Now, coming to the concept, why the valuation is required. I'm purely sharing my experience when I do a transactions. I'm representing a buyer, I'm representing a promoter, I'm representing a co-buyer, I'm representing one of the selling shareholder. Why valuation is required? So if you ask me, I will put it in three broad bucket from the corporate, commercial, legal perspective. First most thing is the investor. See, I advise on the legal front. Valuer would have been advising on the valuation side. But it is the buyer or the investor who has been doing this business which he wants to acquire, who knows the game better than us. As we all know, fundamentally, beauty lies in the eyes of the beholder. The buyer, the investor knows better than us in general the broad sort of business value, enterprise value of the company, of the asset, of the shares, of the security he's going to buy. I'm not going into detail. It is 100% acquisition, it is asset purchase, it is slum sale, it is business transfer agreement, it is through the code, whatever. But he understands broad value of enterprise because he has been doing business for last 2 decades. He has been a sort of expert of that particular business activity. So the first most thing is the buyer, and he would certainly like to value the asset because it is the simple reason valuation is required because it brings value to everyone. He would really want to know from the independent expert how and what you would value this asset, this business I'm targeting to buy. That's the first stakeholder or first reason we have to have it. And this is irrespective of any law, whether or not it is required under income tax, FEMA, RBI, SEBI, IBBI, he will go and he has to have this valuation. So he become the first stakeholder. Coming to the second stakeholder, that is basically a prescribed law because there's an obligation under the Companies Act to get a valuation, in case of preferential issue, in case of private placement, in case of liquidation, whatever. Because there's an obligation under the SEBI law, LODR regulation, because it's an obligation under the FEMA, inbound, outbound, because it's a regulation under IBBI. So second category becomes broadly the stakeholder, sorry, the government side, which is a more kind of situation of prescribed, legal requirement. But the third stakeholder to me is the most critical. And the third list is, I would say, reservatory yet open-ended. This is very important, I think, aspect of the way the law has been changing. The third category of reasons, rationale as to why we should have valuation. Let me go one by one. First of all, uh, to enable the board of directors, importantly, the independent directors, non-executive, to be sure about their position, their decisions to approve a transaction in terms of what they are selling of, what they are acquiring. You all know that the role, duties, responsibilities of the directors have now been incorporated under the law. While the duties are generally codified under Section 166, the responsibilities, duties, functions of independent directors have been detailed in a schedule called Schedule 4 of the Companies Act. Certainly, the lawmaker have gone beyond the corporate governance, if you ask me. And these duties have been sort of invoked, triggered time and again from the regulator, or they have been observed if they are not part of the ratio, decisions or the order of relevant court, but they have been forming part of obiter dicta, observations by the relevant court. So they are very mindful. In fact, if you ask me, acting like an independent director is no more a non-executive job, if you ask me. There was a time when a person would have been acting as a director, that is independent director in more than 10 companies, 8 companies, 7 companies. But given the role responsibilities, I don't think a person can act as independent director in more than one company or maximum 2 companies. And there is a sharp increase when the prominent people, legal expert, they have been stepping down from the position of independent director. So it becomes very important from their perspective. Now, the next one is the minority protection. Whenever you're doing a transactions like minority squeezing out, or maybe what you call, you are doing a transaction, something of merger, demerger, importantly, reduction of share capital. And you have been sort of squeezing out a minority 3%, 4%, 5%, 10%, which carries a significant valuation related issue. It becomes a critical aspect. There have been a live issues, by the way, when a company would have been made delisted pursuant to acquisition by a company. Now think about a situation, a company which has become delisted, 95, 96% of the company is being held by the promoter. Companies typically is an unlisted public company, 4, 5% are being held by the minority shareholder, and they do not have a skin involved in the game, but still they want to continue. And the company would have proposed a scheme of reduction wherein they want to squeeze out the family or 5% of the minority, protect minorities, giving the fair valuation, but they have been challenging it before the court of law. There have been schemes of capital reduction which have been pending before the court, which is now NCLT for 3 years, 4 years, primarily on account of the valuation. And what they have been alleging, valuation is not fair. Valuation is unfair. They should have offered something which should have been offered 2 years back. At the same time, there's a concept of this thing. Hello, am I audible? Am I audible?
Yes, sir.
Yes,
Okay.
go ahead, go ahead.
At the same time, there's a concept called a fair risk vis-a-vis the equity. So these are the things which go before the court of law into sort of dialogue. When that lot of to and from happen, then the court would decide accordingly. Now, again, class action suit is something which I don't know people, importantly, valuers are mindful or not. In fact, this concept of class action suit, which has been codified, under the Companies Act, White Section 240, 247, I believe, has 245, I believe, has been very scary. And I request you people to please go and read Section 245. Section 245 of the Companies Act, which has basically codified the concept of class action suit, gives a right to the shareholder of a company to go and claim damage not only against the promoter but also the people who have been shown as consultant, advisor, and expert. So potentially they may go and claim damage in case of any loss caused to them by or on account of operation mismanagement, by the promoters or the majority. If the valuer would have signed something, certified something, which appears to be on the face of it primarily wrong, incorrect, substantially, which has added to that kind of loss, potentially they can claim. Because this was a drastic lacuna when we compare this class action suit with the erstwhile framework of the operation mismanagement. Earlier, under the erstwhile framework of operation mismanagement, there was no right given to the shareholder, who means the minority shareholder, public shareholder, who would have been caused relevant damage by the majority shareholder. And classic example of Satyam, when Satyam happened, the ADR, American Depository Receipt Holder, GDR holder in the America, they sued the promoter and the company. They got money paid by the promoter, importantly by the auditor, PwC, there in US. But none of a single public shareholder in India could got a single penny from anyone. So that was a serious lacuna, and that's the reason the class action suit was brought in. But this is very wide in terms of its coverage. They have a right to go against an expert, importantly, lawyers, expert, consultant, valuer. So that's something we have to be mindful about it. IBC is ever evolving. As you guys know, IBC entails not a normal course valuation when there are allegation coming like a preferred transactions, overriding transactions, and we have seen case of JP Infratech. When a holding company would have obtained, JP Associate would have obtained financial assistance in normal course from Standard Chartered Bank, about 900 crore, and the subsidiary company, unfortunately, it was not a holding subsidiary, but it's a subsidiary company, 72% holding JP Infratech. They would have given interest-free, no consideration sort of security, and they were not thinking about any IBC in future. But IBC came, and the insolvency professional, the erstwhile insolvency professional, I think Mr. Anuj Jain, he would have filed a complaint before NCLT alleging, sort of preferred transactions, avoiding transactions. The matter from NCLT went going to NCLAT and conclusively decided right at the Supreme Court. So that obviously was something people would have learned out of it. So then that's how the valuation becomes very critical. Now, ESG corporate governance, ESG, believe me, has become very, very, very significant. I heard 3, 4 people, and I think last I heard Mr. Goel Ji, who was mentioning about you guys are sort of bringing in some courses, some sort of training vis-a-vis ESG. I would highly recommend, please go into ESG. These are published data globally. A company with higher rating in corporate governance got the highest valuation. Believe me, it's a time frame wherein each one of us, be it the owner, promoter, in-house counsel, external counsel, valuer, company secretary, chart account, everyone has a role to play. And it's a win-win situation because we are rising, we are shining like anything. Global investors are coming in, pumping in money. I do million of dollars of transactions wherein the ESG compliance becomes a condition precedent. They get a certification from the promoter. I'm happy. The investor from US saying, I'm happy pumping in 30% of your stake. Let's say $500 million in your company, but you have to fulfill certain conditions. One of the important conditions is ESG certification because their standards of ethics governance are very, very high. Believe me, they are so conscious about. You would be surprised to know if I put a basic, sort of thought for consideration. When I do a call, and my 70% client are from US, UK, Japan, Singapore jurisdiction, we end up doing a call with our overseas client from US generally in the evening. And I at times propose a call, let's do at 7 o'clock. You know what they do? They say, Harish, it's a sort of, a winter vacation. Our sun rises generally about 7:30. So I may not like to switch on my light at 7 a.m. They will be dark. Can we postpone a call from 7 p.m. your time to 7:30? Because by that time my sun would have risen. I may not be required to switch on my light. It causes some sort of loss to my environment. Can you believe the thought process? They are so fundamental in their approach, very basic about their approach. And they feel sorry before writing you an email on weekend because they appreciate it is your time, it is family time. So this is very important aspect. Again, valuation is very, very important in the context of mediation, arbitration, significantly in case of the international arbitration of sizable amount. A lot of M&A transactions, a lot of management dispute, a lot of shareholder dispute, they have been put before the court. Importantly, international arbitration, there are allegations vis-a-vis the fraudulent conduct, siphoning of fund. Valuers have been asked by the court to submit their report before the court of law, before the arbitrator. So when the valuer who is certifying the report, so see the kind of mindfulness this person should have while preparing, submitting that report. So this becoming very important, and one of the commercial reasons why valuation is required is the dynamic natures of a business. So I heard someone speaking about startup, grown-up startup, unicorn, and this has become the present. This has become the reality. And I give a live example. We are living in a sort of world wherein, sorry sir, you're saying something. Can you hear me?
Go ahead, go ahead.
No, I know very well. We had a long discussions with
No,
you, and
I will take
you
5 more
have
minutes,
so
sir.
immense knowledge.
No, sir,
that it is
subject is very close. I'll take only 5 minutes if you want me.
this is a very short. I'll call it a teaser.
Okay, yeah. So this is actually,
Not
I would
even
need a
trailer
day.
of your
I would need a
expertise and
day actually.
your
I would need
knowledge.
a day. This
And
subject.
I
I'll
believe that
close it, sir, in 2 minutes. I'll close in 2 minutes.
okay.
Give me 2 minutes. Okay, sir. So what I was trying to put up before illustration, a company. Can you hear me, sir?
Yeah,
Am I
go
audible?
ahead. Yes, yes. Go
Company
ahead.
owning car is lesser in value than a company with no car. Uber, Ola. Company owning hotel, restaurant is lesser than value than a company holding no hotel. Like, we have this, what do you call, the hotel booking company when we say, I'm forgetting the name. When we
Oigo.
say, Oyo. Company owning restaurants, hotels is lesser value than the Zomato, Swiggy. Right? This is a fact of the day. Make My Trip is the first first startup setup in 2002-3, but they are lesser in value for the simple reason they got their parent company listed and they got their value derived from the listing sort of, a security. So that's how they are lesser in valuation because they don't have that kind of benefit of flexibility, which is otherwise available to unlisted code. So, sir, I close my presentation with a very, very fundamental view vis-a-vis the expectation from the valuer. See, sir, court, be it NCLT, be it High Court, be it Supreme Court, they will never ever, in general, I say, when I say never, in general, they will never go beyond the commercial wisdom of the board of directors. They, in general, would not kind of go and check or question upon the valuation, but what they expect that the valuer should have at least applied the basic concept, which is a reasonableness check. That's something you have to be mindful about it. And gone are the days, sir, when you may issue the valuation report basis the 10 assumptions given by the management representation. No, at least I should have done the basic tick and could have asked the very fundamental, a confirmation or question from the giver management. Please confirm. I should be in a position to raise at least minimum why and to seek that basic confirmation before issuing my report. And thus, so I take a pause here because the subject is so probably I lost in my thought, Vijayji. I take your pardon, but yeah, would be happy to contribute. And again, while
You
concluding,
see, you have that's why I was saying you have a special another way of because to listen to you is through another CEP specifically
Sir, I would,
dedicated to you
yeah,
only. And of
I
course,
close
you are
my,
part of our IBC course, which we are launching on
yes,
1st
sir,
of July.
yes, sir. I will be,
So
would be happy to
people would
contribute.
like to, and you would definitely deliver what is expected of an eminent lawyer like you in
Yes, sir.
our
Certainly, sir.
system and
Certainly.
our and for the benefit of our fraternity, the valuation fraternity. So I'm
Sure, sir.
sorry,
And
but
sir,
I
from IBC, just to give perspective, sir, from the IBC perspective, we have
your voice.
represented all the three sides, sir. We represented COC, we represented investor, we represented the insolvency professional, and we were part of the transactions like acquiring of the SR Steel by ArcelorMittal. This matter went for 3 years plus. Last year, we got deal of the year for acquisitions of Reliance Capital by Hindu Das. We represented, we're part of the Richi Soya. So we have seen it from different perspective. And what I believe is that it is a different, it's probably the perspective which matters the most than the letter of law.
Uh, Basic idea is what you said in the last is that the values should be aware of the legal implication, and there is definitely what you say. Even we observe this that the judiciary expects us to deliver in a proper manner. Number is no issue for them.
So if I am done with the basic quote unquote reasonableness check, if I'm
Yes,
good in my conduct, if my good in my reporting, I think I'm fair. I have done justice to my job, sir.
yes, yes.
That's very subjective, sir, but that's very basic.
So thank you,
Excellent, sir.
Ariji.
Excellent.
Thank you, Ariji. Thank you very much. And
Namaskar, sir. Thank you.
I'm sorry to disturb you in your flow. I know
No,
very
no,
well
sir. No,
that
no. I
you
take pardon,
have,
sir. I take pardon. Sorry. I
but
take pardon.
your, your wish to share your knowledge and information, whatever you have, is, laudable. I can't say beyond. I don't have the words. I know because we had long discussions previously. So that is how it is.
You guys are ocean of knowledge and valuation. I'm just a drop and I'm mindful about my statements, sir.
So the drop is always,
No,
full of
no.
drops. Ocean is
It
what?
is, it's my interest. So I thought to it's my emotion probably, which got
Thank
busted
you.
out. Thank
Thank
you,
you,
sir.
sir. Thank you very much.
Thank you very much.
Now I would like to call upon Mr. Sudhakar ji for on the technology aspect. Sudhakar ji, I'm sorry, I'll not take much of time. You please proceed. Thank you.
Yes, sir. Thank you. Thank you so much. I begin by paying my respect and tribute to a Karma Yogi through whose vision, through whose efforts, through whose dedication and determination, through whose devotion Mother India gave birth to a new profession in the independent India, Shri Phulchand Goel. And as I extend my Founders Day wishes to the entire fraternity, I thank the President Thiru Tyagarajanayya Avargale, the Honorary General Secretary Shri Vinay Goel Ji, council members and office bearers of IOV and IOV RVF for giving me this wonderful opportunity to participate in this event on a historically significant day commemorating Shri P.C. Goel's birthday. What even more excited me was the aim of IOV that he had set or he had published in 1968 journal, aligning with the topic for today's theme, which is specialized skills and smarter tools. Now, every profession needs a tool. There is no exception to it. Be it a doctor, be it a architect, or be it anyone. Every profession needs a tool. Now, let us look at the way Tally transformed accounting. Once that transformation happened, chartered accountants started flourishing. Once AutoCAD transformed designing, architects started flourishing. And fortunately, and through all the partnerships, including the IOV's partnership, I'm from a software which is closely associated with the valuation firm, which is simplifying reporting across the country. And over the last 10 years, we've been traveling with the valuation fraternity. And right now, we are by far the largest valuation software which the Indian valuer community has trusted in reporting, in generating reports in over 720 different templates. In today's scenario, especially when the overall real estate sector is set to double over the next 5 years, or even by 2023, we are looking at about 1.5 crore to 1 crore 80 lakh properties shifting hands, getting transacted. And as Pichaya sir said, that 25% CAGR is the growth rate of valuation, which is double the rate of India's GDP growth rate. Now it's phenomenal opportunities. And at this juncture, capacity building becomes extremely critical. And one of the methods is technology, involving technology in the valuation process. So that brings me to today's topic, which was assigned to me. Now, what is happening at a global level? While we've been hearing about AVMs and all those stuffs, but having said that, at least 42% of the surveyors across UK or who have been surveyed by RACS have confirmed that they would want AI integrated in their day-to-day operations. And they're kind of looking at more of a hybrid model. And if you look at some of the models which have been built across US, UK, they all range anywhere between 70 to 84%, 85% accuracy, which can probably help minimize some of the risks, and potentially some of the exceptions can be thrown out. Now, over the next few slides, let me show you through some of the technologies or what is actually happening at the back end, before which, after having traveled with valuation for this many years and the way we look forward, there is some evolution which is happening. There is a higher elevated expectation which I see evolving, and I see the valuation fraternity also, the kind of requirements which come to me. I somewhere see that they want it to be more context based, and they want to show the foresight that they are seeing with their clients, and which means they want more smarter, more intelligent system to travel along with them. And some of the tools which probably can eliminate the challenges which we normally face here is like the manual effort, the delay, and defensibility. What Pichaya sir was repeatedly saying, defensibility of valuation, margin stress. Now, I was speaking to a counterpart in US, and they said that the automation process has completely transformed from mundane manual work. I mean, reducing the staff and increasing the margins. Some of these traditional processes coupled with these challenges get eliminated when we get into the modern tools. Let us see how from a real estate standpoint or from a mortgage standpoint, some of the basic stuffs which we otherwise face so much challenges, say for example, the street view analysis or comparable identification, or for that matter, even risk assessments through government integrations, mobile applications for data collections, automated geotagging, and then you actually can generate reports from a site inspection itself. Rather than going in with excellent word-based templates, you can have pre-built templates to generate reports, and most importantly, digital signatures to ensure there are no fraudulent interventions which happen in the way of delivery. Now, what are the most common or evolving methods in which some of these can be done as NLP and, of course, CNN? Now, these minimize some of the errors in manual processes. Like, say, for example, it can flip through the document, it can show you the ownership, it can fetch the extent, it can fetch the boundaries, it can fetch the survey number, it can do a whole bunch of things which when integrated with your tool like eValo actually goes ahead and minimizes the vulnerable areas or areas which are prone to errors. The other areas are other technology, other methods like isolation forest, which again helps you managing in exceptions. Now say for example, when the ownership is not matching, and the system can actually start prompting you that as per site inspection, this is the owner, but as per the document, this is the owner. Extent is this, extent is that. Now you get to decide, and you don't get to search for question. You take an opinion, and you don't keep intersecting or bisecting the data or the documents. So LSTM, now this is something which is actually creeping up. Now what valuers are actually evolving is into predictive analytics. Now they're forecasting. Now metro is coming in across the country, or highway departments are going up. Now the valuers are now able to predict like 5 years or 10 years from now, this is where it is going to be. Who else other than a valuer is competent enough to say that? That has to get translated in the form of a statistical modeling, over which the valuer adds his opinion and gets delivered to a client. And LSTM helps us make that far more possible. And the way we see it is, somewhere a co-pilot, a digital co-pilot or a valuation co-pilot can actually start running parallelly along with your existing processes, whereby it continues to minimize your risks, maximize your accuracy, and again, it flags out irregularities and make sure you're staying more compliant, and fraud-free reports get delivered and generated to your clients, whereby the entire business starts scaling up. And what we foresee is at least 70% reduction in the documentation related or document handling related stuff, and perhaps 100% compliance adherence, because there's going to be a digital trail of every single thing which has happened, an audit trail, the document management system. So more or less, the digital ecosystem is all set to make the entire fraternity far more accurate and far more comfortable, because the moment these are taken care of, just like how the charter accountants took off or the architects took off, the moment a trustworthy, reliable tool comes handy, valuation professionals all set to go, especially when 25% is the growth CAGR growth rate. Perhaps what could be a challenge, right? Immediate challenge I foresee is the cost of adoption, cost of putting these in the form of a tool. But I'm sure over the next 2 or 3 years' time, these technologies should become far more accessible, affordable, and adoptable. And while I end this here, I once again recommit and reassure ourselves to the vision of Sri P.C. Goel, and we stand committed to the growth of this profession, aligned with this profession. Thanking you once again, Vinay sir, Tyagarajan sir, co-panelists, IOV RVF council members, for having me as a part of this event. Thank you so much. Thank you.
Thank you, Sudhakar. You have, quite discreetly described about your this tools and how these tools can help our valuation profession advance. And this is a demand of the time. This is, not futuristic. I would rather say it is now is the present contemporary requirement. Future is another way, but it is not futuristic. People may be thinking that it's a futuristic idea of having technological tools, but I consider it as requirement of the present day, which is very, very essential now. And it is picking up, and I'm happy that people are getting adapted to this these technologies, which is going to benefit them only, and then the stakeholders also. So thank you again.
Thank you
Thank
so
you
much.
very much, Sudhakar, for joining
so
us and
Thank you.
speaking about. Thank you. And now, last and the least are our Yuva Morcha, our Yuva Valuers Forum, represented by lead uh, Devesh Jainji and Meghna, and the convener Meghna Pathakji from Devesh Jain is from Pune, and Meghna is from Ujjain. Both of them are from very, I would say ki is from the very essential cities. Pune, a growing city and technologically growing, and Ujjain, as everybody knows, everyone is aware of Ujjain, what Ujjain stands for. So let's hear our young enterprising values. So please proceed, Deveji.
Yes, sir.
And
So, good afternoon, all of you. So, my tributes to the late P.C. Goel sir, and thank you, Vinay Goel sir, Tyagarajan sir, for letting us speak today and giving us an opportunity to speak in front of all of you. So, we won't be speaking on technical terms because there are experts for that today, and we've heard everyone, and it was very enriching, to listen to each and every one of the experts who were speaking. So today I'll be talking on the topic of turning expertise into enterprise in valuation profession, right? So yeah, so we'll just start. So my first content for today is build your own business, BYOB. So basically, build your own business is something we need to practice in our everyday routine, right? So there might be a lot of entrepreneurs here who might be working in teams or who might be working solo also. Okay. So first of all, if we are going solo, then we need to have a team, right? And if we are working in a team, then we need to have some value systems through which we as entrepreneurs have to get business, and we can take up more and give more expertise in the market. Next is having roles defined. Please have your roles defined when you're working in a team, right? Responsibilities must be fixed and not fluid. One person cannot do all the jobs. Clarity is currency. So as an entrepreneur, we always have to, as entrepreneurs, we have to have sharp goals, because vague goals will have vague results. So your employees' performance is of utmost importance, right? So with respect to valuations, visits, reporting, defining your purpose, everything needs to be crystal clear, so that you get the roles, so that you get the results that you have tailored for. And don't be the one-man army. That is what is my basic advice to each and every entrepreneur, each and every young valuer that is practicing today. Don't be the one-man army. If you are doing everything on your own, then you have a very less scope to go uphill, right? So make a team, give them work, give them tasks, right? Doing everything alone will stop your growth. But how will you do this, right? So you need to automate to elevate. So you need to stop running your business and let it run itself. Okay. So basically, what is automate to elevate? Do the less more. That is what we call in automate to elevate. So you will need to do custom training, effective automation, spend on upgrading the skills of your employees rather than on any other things. Spend on upgrading your employee skills so that you get your output, right? Automation works best when people understand how to do it and what to do. So if we spend 80% of our time individually managing operations, then who will be building the future of a business, right? So lessen your time in basic operations and focus on upgrading the skills. But this is all we've learned, we've heard all of this through LinkedIn, through various webinars, so how do we automate? So what have I done? That I have made one graph, and then I'll just explain the graph to you. So this graph is a trust versus skill graph. So x-axis we have trust, y-axis we have skills. So the first point so there are four kind of people that we see especially in our fields. Okay, so the first category is low on trust and low on skills. Okay, so these people cannot be trusted and they are low on skills also. The next category of people that we see in our profession is low on trust but high on skills. So these are very skilled people. They know their job really well, but they are low on trust. You cannot trust them. So these people have a lot of ego, right? And these people love challenges. So once you challenge these kind of people, you are 100% bound to get your work done. The next category that comes is high on trust and low on skills. So high on trust and low on skills are those people who do not have skills, but those people who you can trust, right? So this category comes in the on paper is like where you can give your office keys, or you can give your checkbooks to such kind of people. And the fourth kind of people that we come across is high on trust and high on skills. So basically this is us as entrepreneurs, as valuers, because we are high on trust and high on skills. So basically the first category that is there, you may not consider those people, but as an entrepreneur, our job is to bring the other two categories to the fourth category, that is high on trust and high on skills, right? Now, the next part is mentoring and team management. So you need to consult a good mentor, or if you're leading the team, you need to be a very good mentor. So I'm coming to the end. We'll just hear one story that I resonate very much from the Mahabharata, right? So I'll just tell you this story in short, and then I'll connect it with our profession. So this is the four people in the story are Lord Krishna, Balram, Arjun, and Duryodhan. Where Balram says that Krishna, you've been biased with the Pandavas, right? But Krishna says ki I have not been biased. I'll give both the Pandavas and the Kauravas a similar chance to wish whatever they ask whatever they wish for in the Mahabharata war. So the first chance is given to Duryodhan and the second chance is given to Arjun. Where Duryodhan, the Krishna gives two options. One is his Narayani force, and the second is he himself without any weapons. So, as we all know, Duryodhan opts for the force, the Narayani Sena, and Arjun opts for Krishna without any weapons. And all of us know what the result is, right? So, as Krishna plays the role of the mentor, he plays the correct role of the mentor, which leads the Pandavas to win the Mahabharata, while Duryodhan has the strongest force in the world. So even though he has the strongest force, he loses to the Pandavas, right? So basically what we learn from this story is that having the best people on board will not give you results, but mentoring the lower ones and getting them on the highest position will get us to incredible results. So you are the captain of the ship and you are not the engine room person, right? So don't be stuck in operations, rather focus on skills and upgradation of the skills. And as Steve Jobs says, great things in business are never done by one person, they are done by a team of people. So I end my presentation here with this, and thank you so much for hearing me out today. Thank you so much, sir.
Thank you, Devesh, and I would say it's a real creative presentation of
Thank
the
you so
day.
much, sir.
Of the day.
More
Sorry, I don't
energetic.
mean anything
More,
for others.
Yes, sir.
And
Thank you.
sir will agree, Tyagaraja ji will agree that.
more energetic.
Thank you so much, sir.
And a lesson for us also, because I am also getting it.
Absolutely, sir. It's a lesson for all of us.
Yeah. That's true.
Yeah.
That's true.
Good.
Yes. Thank you so much,
Congratulations.
sir. Thank you.
Congratulations.
Good, Jay.
So now I think Meghna would like to add to it. Meghna, please come in.
Thank you, sir. After this whole lot of presentation, I'm a bit skeptic about my smaller one. But yeah, connecting to the previous one also, I'm here presenting on the same topic of the decadal journey that we as a valuer, as young valuer, are going through. So let me just put it on the screen. So here, firstly giving my tribute to the PC Goel sir, and in the galaxy of these eminent valuers, I am, as a student of yours, providing you my decadal journey as a young valuer and providing you the insights that we are up to sharing from the for the fraternity. So here the journey begins. Actually, my journey started something 12 years back with my father in the same field. I started going in the office and I got the knowledge from there. I got a basic judgment of local knowledge and this and that things. And in the 12 years, the things have drastically changed. We used to do that valuation on a 2 or 3 page handwritten formats or many a times things, but now we are having that whole lot of a 12 to 20 pages reports, and that is quite a formalization with ethics, that model code of conducts and many a things, all structured properly in the base manner. This has not only shifted our profession, but we have also evolved as valuer and contributed to the economy of our country as well. So in that case, I feel like a bit, quotes unquote, a warrior or a change maker for the country. So the foundation that we have inherited, being the flag bearer of Yuva Forum, the foundation that you all have inculcated in us is the focus on the tangible asset that now has constructed into tangible, intangible, startup valuation. I thought I actually listened to something like satellite valuation. That was even a new thing for me. So these kind of things. Then institution. Firstly, the institution was just nationalized or basic banks, LIC and things. And now we are inculcating the IBBIs and everything in this. Firstly, this, as we got into the nostalgia of unstructured report, now we are having much structured and trusted reports.
Correct.
Previously, we were having quite emotional significance for that. But now we are quite driven with what the sentiments of the property are based to. Finally, the limited documentation. I would rather say that it is all you all's effort that we are now having documentation in the open format. The mirror of the documentation has rose to a high bar, and we are actually getting details and documentation on the more format and the post iterative format. So this is the decadal shift that we are all experiencing. Firstly, the regulatory shift. As we all are accompanied with the IBBI and Companies Act, then the structured compliances that we are going through regarding the consistency, audit trails, accountability, model conducts, everything. And finally, as young valuers, our personal journey that you all are mentoring us. The hands-on learning, the interaction, the continuous upgradation by WhatsApp groups or case studies, everything, the CPs and all are contributing to our personal journey, and we are actually inculcating this skill in more and more formats. As a youth, we feel ourselves as change makers, observers, and operators. So, global exposure, as in the first session itself, I got to know about that, the international tenders and this and that. So, global exposure is there, and it is benchmarking the practices. Then the technologically driven perspective, as we have seen in the last presentation itself, the tech is making a change maker role in here. Then comes the valuation of intangible and startups, a new paradigm, a complete shift, and the new mindset. We are trying, we are actually collaborating, we are making it more data centric, and we are actually willing to question the assumptions that were previously made. In that case, as young valuer, I would just rather say that as today's valuer, we are wearing many hats, and we are not just analysts anymore. We are communicators and compliance custodians. The financial modeling scenario, testing, everything is actually being there to be explained to stakeholders in the most easiest format. The soft skills that we are developing, that soft skills actually we are learning, is playing a major role in developing the confidence, trust, and newness to the valuation reports and the skill that we are imparting to the society. Then comes the next gen valuers toolbox. That's what I felt with these 12 years in my hand. I have developed some smarter tools at my office. The analytical skills have grown too far. The staff is having a care to the regulatory compliances and the soft skills that we are dealing with and we are developing with day to day. These are playing a major role in our valuation subjects. Finally comes the balance that bridge the gap between the existing senior valuers and young valuers with the enthusiasm of learning us. The legacy that you guys offer is way above any bar. Then the leadership that demands is innovation, ability, and clear vision, and we have to train our youth with respect to that. for providing a role that does not disrupt the connection between the legacy and the new leadership, but bridge a gap between that. We need translators, we need humility backed senior valuers, so that this bridging of the gap is not as complicated as it seems, but it is more smoother in the coming future. And finally, as youth, I would like to put my point on the youth factor, that as young valuers, we are here not just to rewrite the rules, but we are here to inherit your vision and build another uh, Burj Khalifa out of it. The leadership does not has to be uh, contained on a single point, but we are evolving, we are trying to do good. And I hope that with the inheritance of your all collaborative efforts, the legacy and leadership will build a sustainable valuation ecosystem. Thank you.
Thank you, Meghna. It's another feather, I would say, today's program. And you have really described what a youth has to feel like and what it means to be dynamism. It
Thank you, sir.
means to be dynamic, and how the valuation profession. I'm feeling proud of you both. That
Thank you, sir.
you see, what I felt is now is being visible. That the youth has to be inculcated with the values, and their ideas should come up. Like what Devesh has said, you people have the future, so you have to grow up. Now you can evolve. You have very rightly pointed out there, you are not there to change the rules. Rather, you have to evolve and see for the in the contemporary scenario, or the what are the present days challenges. The you have to see how you can get out of that and win over the situation.
Yes,
Thank
sir.
you,
We have
very
to
very
build a
insightful.
sustainable ecosystem for that.
Sure, that's it. That it is.
Yeah.
And sir, before I end, I would like to quote one our very you know him very well, my friend Manoj Kumar Dharnia from Jaipur. He has written a very beautiful three-liners or so. He says, "My sincere tribute to late Shri P.C. Goel Sahab, who not only plant a tree in form of IOV, but nurture it till his last breath, and made it so big its branches are all over length and breadth of country." Just a short script tribute by
Good.
Mr. Manoj Kumar Dharnia from Jaipur. He very well known to I think you also know him. With this and I
Good.
come to thank all, sir, specifically you yourself. You have taken so much time out of your busy, and I know you are indulged with the trust work, temple trust works, and other quorums. You have sat down throughout the session, listened to everybody, and now you will come up with instructions for us to carry on how to go about. Thank you for your participation.
Thank you.
And Dr. R.K. Patel, our Vice President IOV, Mr. S. Pichaiya ji, is Council Member and the Chairperson of Valuation Standards Advisory Board. Mr. Nitin Lele ji, who is our Chairman of IOV Advisory Committee for Capacity Building and Valuation. And then our guest, Mr. Harish Kumar, his partner, Luthra and Luthra, is a renowned advocacy firm in Delhi, and Mr. Anuradha Gupta, who is basically a company secretary and attached with us as a senior faculty. Right now, she is taking our MEP classes. She took out 5 minutes from that and then delivered the lecture. And I would not like to take much time. You can see how we are performing. I am not boasting that at 4 we have to start another program of this CEP program. So, and then Mr. Sudhakar Vijay Sarthi ji, is founder eValo, with his, as usual, building on his technological inputs for the valuation profession. And then finally, our youth leaders, Mr. Devesh Jain and Ms. Meghna Pathak, who have given a out of box, I would say, presentation, and for us to learn more. So thank you all, and thank you all the participants who have. I'm seeing that there are almost now it was 250, but now there are 229. But they have been sitting here. They are writing so many this thing. I would have wished that we could take and interact with them through a question answer session, but time, I have not left with much time. I'm sorry for that, but definitely we'll come up again with the same this thing. So thank you all. Thank you very much.
Thanks for everything.
Thank you so much, sir.
Thank you very much. Thank you.